recording. Got it. Okay, good. And game plan for today is to get through the chapter 2 practice midterm. I asked you to look at that as a homework assignment, and we're going to be going through that together. And since my expectation is that you've already looked at that, I will be reaching out to the class to see what your thoughts are as to how we got to the correct answers on those questions. You know, I highlighted the right answer on those to help you to sort of practice with them and see how we got to, but I want you to be able to explain to me how you got to that highlighted correct answer. The other thing we're going to do is look at the chapter 3 slides, chapter 3-4 slides. The slides for chapter 3-4. Okay, so that's where we're going. I want to repeat what I said last time about the midterm and try to make sure that we're all on the same page with that. So let me put my machine in tab. And there goes my camera. So no camera today. You can still hear me though, right? Hello?
Yes.
Okay, good. As long as you can still hear me, that's fine. We don't have to have the camera, unfortunately. It tends to want to wig out on me when I go into tablet mode. It's only happened with this computer, so I'm never sure what this computer is going to do to me at any point in time. But anyway, so let's go ahead and just remind ourselves, making sure we're all on the same page. We have changed the exam date. It is not going to be on February 7th. It is going to be, what day do we say, guys?
February 9th, starting at
9th.
11:30 a.m.
Okay, great. Thank you. So February 9th, and it'll open at 11:30 a.m. Okay, in the morning. It'll open at 11:30 a.m. and it will remain open until, and my recollection was we said Monday the 13th.
February 13th at 11:59 p.m.
2/13, thank you. At 11:59 p.m. That means we're talking about, you know, close to midnight, right? It'll be open for 3 hours once you start it. Once you start it, it'll be open for 3 hours and you'll work through the 30 multiple choice questions right in Canvas. And I think I have to reopen my Canvas here, guys. Just to make sure we're all knowing. Oops, wrong school. Sorry. Reopen my Canvas here. A tour of my desktop. Isn't this interesting? Okay. Okay, good. Let me put it in student view. Okay, good. And so when you take the quiz, you'll click here. It's not there yet, but it will be there starting at what we just said, 11:30 a.m. on 2/9. It'll be there for you at that time. And you click on quiz. And once you click on it, very important, once you click on it, it starts your 3 hours running. And you can't stop and say, oh, okay, I've been looking at it for a half hour, so I still have 2.5 hours. Let me go take a nap. It doesn't work that way. Once it starts, it'll run for 3 hours. To be honest with you, I doubt you'll need 3 hours, but I'm going to give you 3 hours. And next time, I think, well, no, you know what? Somebody remind me before we finish class tonight. I'll give you a list of documents that are key documents that I am allowing you to have in front of you as you take this exam. Okay, now, 2 important policy statements here. I do not tolerate cheating. I will catch you if you are cheating, and the hammer will come down. I don't tolerate cheating. You know, in some of my other classes, I give a speech about ethics, and I often get the question, well, how can these unethical things keep happening in business when we have all these laws and things that are designed to prevent those things? And my answer is that there is always some unscrupulous character who think the rules don't apply to them. Well, if you cheat on an exam, you are officially one of those people. If you help somebody cheat on an exam, you are what we call somebody who aids and abets, you know, inappropriate, illegal, whatever activity. Okay, so now is the time for us to understand that. And when it comes to, you know, business, school, that sort of thing, now is the time to make sure that we don't fall into the kind of web of inappropriate behavior. And it starts small and it gets bigger, because if you get away with a small thing, you think you can go and do that next big thing. Okay, so no cheating. I will catch you, and it will not be pleasant. Okay, now the other thing is I don't tolerate things like I forgot to take the exam. I came in on the 9th on the 7th, and I thought the exam was going to be on the 7th, and now I can't take it on the 9th or something along those lines. Those kinds of things don't fly with me. Okay, you know now when the exam, you can see it on the screen. It's going to open on February 9th at 11:30. You can pick any 3-hour window between the 9th at 11:30 a.m. in the morning to February 13th, day before Valentine's Day, up until 11:59. Any 3 hours. Now, I say that I highly, highly discourage trying to start the exam, you know, at 9 p.m. on the 13th and say, well, I've got time, and wait till that last minute. Because then what happens is I started hearing things like, well, my computer wouldn't start up, and I had waited all the way till the day before, and so I had no time to, you know, fix the problem. Okay, plan accordingly. Be assertive about how you're figuring out when you're going to take this exam. I don't see any reason why everyone shouldn't get an A. Question. Okay, give me 1 second, guys, because I need more information than you need, but I have to blow my nose. I can't talk right. So just 1 second. Okay, any question about any of that? Okay, good. So let's go ahead then. And when you're taking the exam, it's going to be the same sort of setup where you're going to have a 30 multiple choice questions. They will have either 4 or 5 choices. Now, I can't remember if I'm going to set it up where they're actually labeled A, B, C, D, E, or they may not have a letter next to them. I'm not sure which, but regardless, there will only be 4 or 5 choices for each question. I don't go into 6, 7, 8 choices. It's 4 or 5 choices. By the way, if you're interested, because sometimes people will say, well, that makes it too easy if it's multiple choice questions, just 4 choices. And I say to them, good, go take the CPA exam if you think that's easy, because the CPA exam is set up in which you have questions where you only have 4 choices. They do A, B, C, D, that's it. Okay, so the format that I'm using is what is given, or the format, not the same material, obviously, but the format is the same as that is used for the professional certified public accountants exam. And you don't go any higher than a CPA in the world of accounting. I guess you could get a PhD in accounting or something, but on the practical practicing side, of things. You don't go any higher than a CPA. Okay, academically, I guess you could go further, but in the real, practicing of accounting, there is nothing higher than the CPA. Okay, all right, good. So we come over and we take a look at this question. Delta 72 received a cash advance of $700 from a customer as a result of this event. And as we were saying last time when we were kind of, maybe if I may use the word struggling with this a little bit, we had said that the best way to do this is to go ahead and make the journal entry that's associated with the description of the transaction, and then compare it to the choices and see if we can figure out what the right answer is. Now, obviously, the answer is highlighted here. I understand that, but it's not going to be highlighted, obviously, on your exam, okay? So let's go ahead and let's get some participation here. If you receive cash, what should you do? Don't go to the shopping mall. If you receive cash, what should you do?
Debit cash.
Good. Debit cash. Excellent. And I can't always see who responded, so thank you, whoever that was. Okay. What should I credit then? I know I got to credit something, right? I received cash in advance.
Deferred revenue.
Say it again.
Deferred unearned revenue or deferred revenue?
Deferred revenue unearned in this class. Okay, we'll call it unearned. Unearned revenue. There are lots of names for that liability depending on the nature of the transaction. Sometimes they'll call it a contract liability, In this class, though, they're all liabilities, though. But in this class, we'll call it unearned revenue. Okay, good. So we credit unearned revenue. Good. We've got the journal entry. Once you figure out the journal entry, and remember, you've got 3 hours to work through. And guys, if it sounds like, well, John, just teach us the material and stop prepping us for the exam. I'm sorry. I've been teaching the CPA exam for over 30 years. And so it's just part of my DNA to talk about the material and context of doing well on an exam. And I don't think you'll be upset if you do well on the exam. Okay, so we go ahead and we debit the cash, we credit the unearned revenue. Good, thanks guys, good participation. And then we start to look at the choices. And I'm going to start at the bottom here, okay, because it's anticlimactic to start with the first one, which we already know is the right answer. Assets and stockholders' equity increase. Well, yeah, assets increase. Stockholders' equity was not affected by this because unearned revenue is a liability, right? Liabilities will decrease by 7. No, they won't. They increase by 7, right? Unearned revenue is a liability. Why is it a liability, by the way, other than the fact that we had said several times that it is? What's the nature of that transaction that makes it a liability?
Because we are liable for the future services.
We are responsible for providing the service, and what if we don't provide the service? What if you don't do this work?
Client can take us to the court.
We have to pay
Yeah,
the
well,
money
hopefully
back.
we would give the money back without going to court, and if not, yeah, we'll go to court and the client will win, and the courts will tell us to give the money back. So if you're going to have to give somebody money, that's a liability. Or if you're going to have to give somebody property or whatever to settle that liability, settle that agreement, that is a liability. Good. Okay, so liabilities increase. Stockholders' equity wasn't affected. So what? The asset increased. Yes, it did. Okay, not that didn't happen. The liability didn't decrease, it increased. Okay, good work, guys. Let's keep going on that with that energy. Okay. All right, we look at number 2. Sebastian Bella has performed $2,000 of CPA services for a client, but has not yet billed the client. And so now she's getting to the end of the accounting period, and she's going to adjust her records. In other words, she's doing some cleanup. Maybe she fell a little behind on her accounting. Okay, hey, she's a CPA. I don't know why. CPAs, I guess, are the worst at keeping up their own stuff. Okay, and so what happens? She's now going to bill the client. Now, let me ask you about the credit side of this entry first. Remember, our approach is to make the journal entry and then go ahead and compare it to the answers. So what about the credit side? She has performed the service, so what should she credit?
Revenue.
Revenue?
Good, we're going to credit revenue. Guys, everybody should be biting at the chance to answer these. Okay, this is when you just kind of sit and participate and you don't say and don't say anything. It's kind of like this. Pretend this was a football team, a sports team of some sort, right? And it was time to practice for the big game. And the coach threw the ball out there on the field, and only 2 people went out there and participated in practice. What would the coach think of the other rest of the team that sat there sitting on the bench with their hands folded while while 2 people were actually engaging in the practice? You think the coach would be confident that the team was going to win, that there's going to be success on the day of the game? Okay, so we go ahead and we credit revenue, 2,000, good. And she is now billing the client. So she needs to record that she has done the work. And if you bill somebody, somebody owes you money. So what should she credit? Okay. What do you-
Accounts receivable?
Accounts receivable.
Good, accounts receivable, good. I almost started to call somebody out, and that's what's going to happen when we don't get the answer. So if I were you, if you're sitting there in a mode where you're just gonna, turn on the video and go have breakfast, or turn on, log in here and go have breakfast somewhere, that's a mistake, because I'm going to call you, and then where everyone's going to know that you're one of the people that's not paying attention. Okay, good. Even if you get it wrong, I don't care if you tell me the wrong answer in here. There's no penalty for giving me the wrong answer in here. Where the bad thing will come is if you get the wrong answer on the exam. Okay, and that's what we're trying to avoid. Okay, good. So she went ahead, she credited accounts receivable for 2,000, and we have the accounts receivable. And I'm just going to go ahead. What am I doing right now? If this is my ledger, what do we call that? What I'm doing right now?
Journal?
That's not the journal. This is the journal. This happens in the journal, often called the general journal. This happens in the journal. What is this?
The posting of the
Ledger?
ledger?
Good, excellent. That's what I like. I like you guys to push the other guy out of the way so you can answer the question. Okay, good. We are posting to the ledger. Excellent. Okay, so I post that to the ledger, and then I look at this, and it says the question here. Now, this was really part of number 2, and it says she subsequently received payment from the client. So the first one is basically saying what the second one's telling us what she did, and then she receives payment. If you receive cash, what should you do?
Debit cash?
Good, I'm going to debit cash. And it doesn't tell me how much cash she got, so I'm going to go ahead and just say that the client didn't pay her the full 2,000, they only paid her 1,500. They're going to pay her the rest later. What should I credit then?
Accounts receivable.
Good, I'm going to credit the accounts receivable for 1,500. And now 500 is owed, 500 is left. Okay. When you look at the ledger accounts, they're almost like a teeter-totter, a scale, if you will. Whatever side it's heavier on, that's the amount of the balance. There's a $500 balance left in the accounts receivable. Good. Okay. Now, let me go ahead and finish my journal entry over here. Now, on the exam, excuse me, guys. Forgive me for my... What? The only thing worse than somebody not paying attention to the class is them having their microphone on while they're not paying attention. Or is that some other ambient noise? I'm not sure. Looks like it might be some other ambient noise. Okay, so that's okay. Okay, All right. Good, it's gone now. Okay, so what happens? I go ahead and I debit cash, I credit the account receivable on the exams where I was going with that. I would potentially sit there and give you the same exact question, but I'll ask you instead, what should be the ending balance in the account receivable as a result of this transaction? Of course, I'd have to tell you the amount that she debited and to cash and credited the receivable, but I'll ask you what's the ending balance, and the answer, of course, would be 500. Good. Okay, good work, guys. All right. Now we look at this number 4. Froggy Company earned revenue of 200,000, incurred expenses of 70,000, and as a result, what should be Froggy's retained earnings ending balance? And it's in the first year of their operations. Now, when I ask you this, your first thing would be to remember, well, we have what? We have beginning balance. What do we add to our retained earnings?
Net income,
Good, net income. Excellent. What do we subtract?
dividends,
Good, we subtract dividend. Excellent. And then the what? Ending balance, which is what the question is asking us, is the result of the beginning balance. What do we add? What do we subtract? And that gives us the ending balance. And so just remember, I have to do this every time I see one of these questions. This is my what? This is my piggy bank. I have to sit here and I have to use this to figure out an answer to a question like this. So what's the beginning balance if it's their first year of operations?
it's revenues minus expenses,
I will ask my question again. What is the beginning balance if it's their first year of operation?
oh, zero, sorry.
Zero.
Excuse
Good.
me,
That's all right. Okay, and then I have to add net income. Where do I report net income? On what statement?
Income statement.
income,
Good, income statement, excellent. Okay, and how do I calculate net income?
that's the revenues minus expenses,
Good, beautiful. Revenue, do I have any revenue?
200,000 minus 70,000 in expenses,
I have to subtract the expenses, good. 70,000, excellent. And I'm left with 130,000 in net income.
correct,
Okay, so I go ahead, I stick in the 130,000 now. This really, the piggy bank is what I'm gonna just abbreviate it, guys. Statement of retained earnings, when it comes down to it. I mean, that's what the piggy bank is, okay? And so I add my net income. They didn't pay any dividends. Does a corporation company have to pay dividends?
no,
No, that's a decision of the board of directors, right? Okay, so we go ahead, we put 0 there. Therefore, obviously, the ending balance is what, 130?
yes,
Okay. By the way, guys, I don't know what the resistance is to calculators these days. When I was going to college and studying accounting, I'm like the old man now, but when I was going to college, man, I clung to my calculator like it was a lifeboat. Okay, and maybe it was because calculators had, only been around for about 10 years at that point. I remember when I got my first calculator, it had these cute little lights, LED type lights inside of it. And my cousin and I, my mom bought us, me and my cousin and I, a calculator each. And we sat there and we played with those things like it was a video game. Okay, and the big one that we kept doing was figuring out how old we were going to be in the year 2000. Okay, and so I guess I was destined to be an accountant. I don't know, but anyway, you gotta use the calculator and bring the, you don't need it for this question, obviously, but for other questions, you need to have that calculator fired up and ready to go. Do not try to sit and take this exam without a calculator. You will mess up. Okay. Now, when I took the CPA exam, I sound like a fossil here. When I took the CPA exam, they didn't let us use calculator. You could not use a calculator on the exam. They've changed that since then. But when I took it, they would not allow you to use a calculator. You had to do everything by hand, and that was scary. Okay. All right, and let's go ahead and let's take a look at number 5. Froggy Company collects 120,000 on July 1st for monthly services to be rendered between, and I changed the date here, between July 3rd, 2015 and June 30th, 2016. So if you think about this, we've got what? We've got a 12-month contract here, right, to provide these services. It's 12 months, okay, if you count through, and this camera's off, but you can count on your fingers for this. July, August, September, October, November, December, that's 6 months. January, February, March, April, May, June, that's another 6 months. That gives me 12 months that are on this contract, okay? Now, on July 1st, which of the following best describes the impact of this transaction on Froggy's financial statements? So Froggy received cash on July 1st. On July 1st, what should this Froggy do, Sarah? I mean, how about Amanda? There is no Sarah. How about Amanda? 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 So she left? That was a solution to that situation? What do you think, Angel? Angel? Okay. What do you think, Lucas? Lucas, what do you think? What should this person Froggy do when they on July 1st? Lucas, is that you? Man, I'm good.
Asset and liability should increase.
Well, that's the highlighted answer. What should they do? What journal entries should be made?
Collects $12,000. Revenue, income statement.
What journal entry should be made? Yeah, I'll come back to you for another question. I'll give you another chance, okay? How about Tuan? What do you think, Tuan? Okay. What do you think, Mala? And I'm just randomly looking at the tiles on the screen here and calling out. Mala, what do you think? Okay. Just writing it down, so when I go to grades, I know, who's been paying attention, who hasn't been. Sarah? I don't think she's here. What do you think, Chris?
I have a question.
Okay,
When you're asking like what kind of journal entry, like are you asking what we should debit or credit, or is it like,
yes, we call that a
Oh.
journal. Yeah, what should be debited, what should be credited?
well, since assets and liabilities are both increasing, should assets be debited and liabilities would be credit, correct?
Well, we're heading in the right direction. Unfortunately, though, on the exam, the correct answer won't be highlighted. And as I've been saying, the approach to getting fat, you know what? Can I do that? Yeah, I need help, all right. Now it's fun. Now we're having fun. Okay, all right. That's how your exam's gonna look. No highlights, okay? But we are heading in the right direction, okay? And was it who asked the question?
That was me.
So let's
Yes.
let's work together on this, okay? All right, so you're right. To increase an asset, you debit it. To decrease it, to increase a liability, you credit it. But that one, that would have been of limited help, especially if the answer isn't highlighted. Okay, so what I want you to do is give me the journal entry, and we never say you debit asset, you credit liability. We speak specifically to accounts that fall in the categories of assets, liabilities, etc. Okay, so what account should be debited? What account should be credited?
Would you debit cash and credit revenue?
Unearned revenue?
Okay, thanks, guys, but you're kind of pushing Mia aside here. I was working with her, but
Sorry.
okay, that's all right. I appreciate enthusiasm. Mia, what do you think? What account should be debited?
I think, would it be revenue? Or would it be the net income?
Okay, there is no account called net income. Net income is the difference between revenue and expenses, of which we go ahead and we put revenue on the income statement, and we subtract expenses, and we present the result, the difference, as the net income. Okay, I'm not trying to pick on anybody here, guys. I know this is, gets a little hard to kind of endure, but I am coaching you. It's my job, okay, to coach you and get you to understand where you need to work on for the exam. Okay, so we've got some work to do here. We're past the point now where we can just kind of wander through this stuff, not understanding what we're doing. When we make a journal entry, okay, and if we receive cash, does your cash go up? It says they collect cash. If you collect cash, does your cash go up?
Yes.
Yeah.
Okay, so, well, come on. So how do you increase cash?
You debit?
Debit.
Good, so I have to debit my cash. Oh, really? Now it's gonna do this. Oh, I guess because I said no color, it won't accept it. Wonderful. So let me do that. And then let me put my pen back to, let me put myself back to pen, okay? So if I receive cash, should I debit cash?
Yes.
Yes.
Now I've done it. Oh, boy. Okay, let me do this. Let me close this. And let me reopen and pray to God that I haven't messed myself up here permanently. Okay, good. And let me debit cash, please, God. Okay, we're back. Let me debit cash, 120,000. Good. Okay, and what should I credit? I got to credit something. I received cash, and they say that I got the money on what? On July 1st, and I'm not going to start providing the service earliest is July 3rd. So have I earned that money yet when I received it?
No.
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 No, so I have a liability. What do we call that liability in this class?
Unearned revenue.
Excellent. Okay, so that's why D is correct, because cash is an asset. We debited it, of course, that was increased. And what? Unearned revenue is a liability. We credited it, so that increased it. Good. Okay, that's how you answer the question. Guys, when you're looking at this on your own, and unfortunately I'm not going to be able to do that because it looks like it wigs out the use of my pen, but when you're practicing for this exam, all right, you need to unhighlight those answers. Highlighting the answer and then backing into a rationalization that you understand the question is not the way to study for this. Okay. Okay, good. Now, using the same facts as question 7, okay, and I'm going to go ahead and ask, I'm going to give Lucas another chance on this one now. Using the same facts as question 7, what impact will providing the service have on Froggy's financial statements? Again, make the journal entry, tell me the journal entry, and then we'll compare it to the answers. So they actually provided the service. Let's say, and I'll help you out a little bit here, that since it's 120,000 and it's 12 months, that means that they're earning 12,000 a month. So let's say they provided 2 months of service. They did the work in July, they did the work in August. What would be the journal entry for having provided now 2 months of service? Say they're catching up and they're going to make that entry, in what? That would be August 31st.
So Froggy's company collect the money first and then do the service after.
Correct.
So that means it completed its liability. So you debit the liability.
Well, it's 2 months worth.
2 months worth.
Yeah. It's 10,000 a month. They've completed the work. Good. We need to debit. What do you want to debit?
You debit the liability.
What do we call that liability? Guys, never say again, debit liability, credit asset, debit asset. Never say that again. These are categories of accounts. We make our journal entry straight to accounts. Never say again, debit asset, credit liability. Never say that. Say to me, debit, and give me the account name. What account do you want me to debit credit?
I'm not sure.
Well, did we credit an account when we got the money that you want to debit now?
We credit the,
When we got the money, was there a name of an account that we credited?
on our revenue.
Okay, it's right there. You're looking at the screen, right?
Yes, I'm also have the chapter 2 slide.
Okay, good. Okay, so right there, right?
Yes.
The account we credited, good. Okay, in fact, let me go ahead and post it. We made the journal entry. We credited 120,000. Okay, good. So now we have a balance there, and I'm gonna run into real estate problems here. I don't have enough room for it, but that's okay. So we went ahead and we have a balance of 120,000. Okay, good. So Lucas, if we have now provided some or all of the service, what should we debit? Now getting back to question 8.
If we provided the service, we should debit the unearned revenue.
Beautiful. Good. Debit unearned. Excellent. And Lucas, I'm saying that they provided 2 months of service. So if it's 10,000 a month, 10,000 times 2 means I should debit unearned revenue 20,000, right?
Yes.
Okay, good. What do you want to credit?
So if you earn money, you should credit the revenue.
Nice.
So-
Don't say anything else. Because I want you to absorb the success here. Okay, good. So you can credit the revenue, right? Because I've earned the revenue.
Yes.
Beautiful. What were you going to say? You have a question there that was coming? No? You want to just
No, like a small question. So like when we study this, should we just write out everything like unearned
Yes.
revenue minus $20,000
Absolutely.
revenue plus $20,000?
Yeah, you know what, since I'm gonna do it anyway, let me do it now, okay? While you're asking this question. Okay, so let me do this. Let me go back to Canvas, all right? And I'm going to be ready to write this down. I'm gonna talk to you about key documents that are going to help you be successful in the exam, okay? When I say documents, it could be 1 page, it could be a couple pages in a document. Okay, you guys ready to write this down? You want me to give you a couple minutes to get a piece of paper? Remember that old-fashioned thing, paper and pen? Okay, that might be a good time to have that. You want me to give you a couple seconds, or you're ready to go?
A couple seconds.
Mhm. I'm gonna coach you guys up whether you like it or not. You're gonna be successful on this exam if I have to come to your house and force you to do a good job on this exam. I'm just kidding. Okay. I am not going to allow you guys to mess this up. It ain't happening, not on my watch. Tell me when you're ready.
I'm ready.
Ready?
Ready?
Okay, here we go. All right. No, and I'm going in order of importance. Okay. The number 1 key document is contained in the chapter 2 slides. Okay. So when we look at the chapter 2 slides, and hopefully it'll let me scroll through them without having to know. Okay, so I guess I'm going to have to download these. Number 2, number 1 is the chapter 2 slides. And let me find it for you now on my desktop so you can see what those number 2 slides look like, because I don't feel like downloading those again because I already have them downloaded. Please stand by. this computer, okay, is this slide. You have to know how to increase assets, liabilities, revenue, expenses, stockholders' equity. You must know that. Now, as I said at the time when we looked at that, that alone is not sufficient, and you're seeing why. And so I said the second most important document is this one, the chart of accounts that constitute those categories. Okay, so this would be the number 2 most important document. So far, we've got what? 2 documents. We've got the what I call the red and the debit credit slide. It's from chapter 2. And the chapter 2 chart of accounts. Okay. Got that? Now, it is important to realize something about dividends. I'm not going to list this as a key document, but I want to make sure that we're clear because dividends isn't really being shown on that slide. Dividends is its own account, okay? It's neither stockholders' equity, nor is it an asset, a liability, a revenue, and expense. But dividends do what? They're a subtract from the retained earnings. So they move in the same direction as expenses. However, unlike expenses that are reported on the income statement, dividends are reported where? What statement?
Retained earnings.
Retained earnings.
Statement of retained earnings. Excellent. As a subtract from the beginning balance plus net income minus dividend gives us the ending balance. Okay, beginning balance plus income minus dividend gives us the ending balance, BASE. And that's the reason that income and dividends are listed under stockholders' equity. That slide is trying to tell you that they ultimately affect retained earnings, right? So right now, our 2 stockholder equity accounts are common stock and retained earnings. Dividend and income affect retained earnings, though, right? Question. Okay, that's 2 documents. I'm not going to count this as a key document because it's really a repeat of this one. It just added the dividend account, really. Okay, all right. Now, that's key. I can close this. Those are the 2 that I wanted from that chapter. Okay, the third most important document then, going back to Canvas, third most important document also comes from chapter 2, and it is this in-class example. This in-class example was one in which we had an account. You had to make the journal entry associated with the description of the transaction, and then you had to post to the ledger. And then from the posting of all those transactions to the ledger, including closing entries, we were able to generate an income statement, a balance sheet, first an income statement, next a statement of retained earnings, and then a balance sheet. You should be able to do this on your own. Read the description of the transaction, and then post it to the ledger, enter it in the journal, post it to the ledger, and then generate the financial statements. Okay. Now, for extra batting practice, okay, so that's what are we on, the third most important document?
Yes.
Okay, that's the third most important document. And For extra batting practice, what I've done is I've given you what I'm calling clean version. That doesn't mean that it's rated PG. That means that what? There's nothing in there. You have to fill it in. If you can do this, there is nothing I will give you on your exam that you can't crush. If you can do this, you will have arrived. There is no reason you should get 100% of the exam, because I'm not going to give any surprises of something. Oh, where'd this come from? And I used to hate when I would take a class and, you know, the person would stand up there and say, anything that's in the book is legitimate for the exam. The reason they would tell you that is because they weren't going to write their own exam. They were just going to generate some exam that pops out of the textbook system and just throw it at you, because they were too lazy to sit there and say, what have I expected my class to understand? What are the key things I've held them accountable to? This is what I am going to test you on. Okay, so I'm not going to count this as a separate document, but you should be able to fill this thing in on your own. Okay, all right, now we go back. Okay, and the next key document is not listed here yet. Okay, so just write down will be comprehensive practice midterm. Practice midterms with an S. Okay, comprehensive practice midterms. Okay, guys, I'm going to give you 3 of them. We'll go through one together that Thursday just before the exam opens. We'll go through one together. And if we have time, we'll go through more than one. I'm going to give you 3. So I'm counting that as one document. There will be 3 comprehensive practice midterms that will give you, that's sort of like the final review, if you will. I mean, that's like if you're training for an event, okay, you're going to get ready, and forgive me for speaking sports terms a lot, I'm a sports fan. You know, if you're sitting there and, you know, you're doing your final hard practice before the game, that's what those practice midterms are. That's how I'm going to test you. You should be ready to crush every single thing in that. And you know what I'll do is I'll make sure and put those up here. I won't wait till Thursday to put those up. I'll put them up before then, but we'll probably won't have time to go through them until the Thursday, the day the exam opens, that class before the exam opens. That's the next. What am I on now, guys? Is that number 4?
Yeah.
Okay.
Yes.
Okay, good. The number 5 most important documents, okay, and I'm counting them as one document here, are the chapter slides from each chapter. That's where you learn the material. I don't necessarily feel that you need to go back through those if you can master those other things. But if you get stuck or something, the slides and the lectures aren't a document, but you can always go back to see what we said about a particular slide if you're confused about that. Okay, that would be the next set of important documents, if you will. I'm not going to count each one separately. The chapters, shoot. You know what? Not the chapter slides, guys. Strike out the word slides. And it's the chapter practice midterms. We had a practice midterm. We're working on chapter 2 now. We'll do chapter 3, 4. I guess it's looking like next time. But these practice midterms, that's the number 5. Number 6 is what I was saying is the slides for each chapter. So I've got 6 key documents. Let me repeat. Chapter 2, the debit credit slide with those red and blue arrows. That's number 1. Number 2 from chapter 2 is the chart of accounts. Okay. Number 3 from chapter 2 is the in-class example that we went through together. And even though I'm counting that as number 3, if you can master that, I won't be able to come up with anything on the exam that could confuse you. Okay, that'll be the third most important document. The fourth most important document is, somebody help me out, the comprehensive practice midterm, which I haven't posted yet, but I will post here.
And you're gonna give us 3 of those, correct?
And there will be 3 of those, correct? That's correct. And we'll go through at least one on that Thursday before. The number 5 most important document are the practice midterms for the chapters. And all those comprehensive ones, guys, are going to take a set of new questions like the ones you saw in the chapter specific practice midterms and put them into one document. And there'll be 3 of those. Okay. And then the number 6 are the chapter slides. Notice, guys, I haven't said much about the homework. The homework is there for extra batting practice if you need to get in and, you know, exercise a little bit more with some of that stuff. You have those homework questions there. That's why I don't put a whole lot of emphasis on homework. I just on the homework from the book, but I do kind of, you know, expect you to, you know, mess around in there sometimes. But in the direct link to what you're going to be examined on are those 6 documents. You may have those documents in front of you while you're taking the exam. So I suggest you figure out a way to printing them or otherwise to have those documents in front of you during the exam. Question? No?
No questions.
Okay. All right. Then what we're going to do, I think, because you're probably, you know, worn out from that discussion, is take a quick break. I know we said sometimes we'd skip the break, but I think it's warranted here. So we'll go ahead and we'll take a 10-minute break, guys, and we'll come back and hopefully we'll knock out at least. I wanted to get through the chapter 3 slides. Doesn't look like that's going to happen, but you'll see next time why that's okay. But I definitely want to finish that chapter 2 practice midterm. Okay. So I'm going to go ahead and pause the recording. We'll come back in about 10 minutes. Start back in to the practice for the chapter 2 questions, and it's going to hide my files from me. Okay. All right, good. So let's go ahead and let's take a look at this next question. Okay. And number 9 here, we say that Froggy Company purchased a building for $1.2 million. Froggy did not have the cash to purchase the building, but provided the seller with $1 million cash down payment and then agreed to pay a $200,000 balance for the next 2 years. As a result of the transaction, okay, and it gives you the choices there, but our approach is going to be to go ahead and make the journal entry and then compare it to the answers. Okay, so let me ask for some help on this, and forgive me, I'm going to probably mispronounce Hathichanock, Hathichanock. Okay, hang on a second. One second, guys. Are you there? Okay. You know, us auditors, I think I'm 100%, right? I mean, has there been anyone that I've called that has been ready to respond? I don't think so. I mean, I don't see how I'm that good at identifying who's not participating. So that's pretty good. So I'm 100%. I don't think I've ever done an audit procedure. Well, I take it back because Lucas worked with us on that, right? So I guess Lucas was the exception, but I think everyone else I called wasn't ready to roll. Okay. All right, good. Let me see here. Since we're running out of time, I guess I'm going to go ahead and stop that process and just ask the class here. What's the journal entry, okay, for this transaction? I purchased a building that had a cost of 1.2 million. They put a down payment of cash of $1 million, and they agreed to pay the rest over the next 2 years, you know, to make up, say, 100,000 in year one, 100,000 in year two, to make up the remaining 200,000. Okay, journal entry for this transaction.
Would you debit building for 1.2 million and credit cash for $1 million and credit mortgage loan for 200?
Good. Debit building for 1.2 million. Since I'm paying out cash, I obviously have to credit cash, right? By the way, very good. Was that Elizabeth?
Yes.
Sometimes it helps me if I can't figure out a journal entry, I'll put in the parts I can figure out, and I know they're going to credit cash. And it sometimes that's what I actually liked about accounting as I was learning it is, well, I can figure out part of it, and then I can kind of, you know, bludgeon my way through the rest of it to get the correct answer. Okay. And then you said loan payable, mortgage payable, whatever, right?
Yes.
Would be the credit to round that journal entry out that says mortgage payable, guys. Mortgage payable, okay, for the 200,000. Good. Is mortgage pay a bill a liability?
Yes.
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 Is a building an asset?
Yes.
Yes.
Is cash an asset?
Yes.
Yes.
Okay, so let's think about the assets first. We know that building went up 1.2, it's an asset, but another asset, cash, came down with 1 million. So net, how much did our assets change? One asset building went up 1.2, another asset, cash, came down 1 million. What was the net change in my assets as a result of this transaction?
200K.
200,000, good. One asset went down, another asset came up, right? Okay, good. And then we know that the only liability in this transaction, and maybe we should have started with the liability to answer this, was mortgage payable, and we know that that increased by 200,000, right?
Yes.
Okay, so you could look at D and kind of get rid of it right away, okay? And you could then kind of have to think through the way I did. For the rest of them, assets didn't increase 1.2, it did what? It only increased a net of 200,000. Assets didn't decrease by 1 million. Yeah, cash decreased, but the building replaced that and more. And so it is correct that what? Assets increased 200,000, and we could have sort of, you know, sat here and narrowed it down to C and D. We know that the liability increased, but D was not correct because the assets increased 200,000. Question. I have put X's through these two questions because I will not ask depreciation questions on the exam. I'm not sure if the file that you have contains these questions or not. If it does, ignore them. These questions are not relevant to the exam. Okay, which leaves us with this one. Okay, All right, so they give me the income statement. How do I know this is the income statement, by the way? Even if it didn't say the income statement, how would I know it's the income statement?
Revenue.
Because it lists the revenues and expenses,
Well, okay, yes, but I was going for either.
net income.
It has net income. How do you calculate net income? Revenue minus expenses. Good. Okay, excellent. Now, when you look at this question, they got revenues of 70. They got the various expenses totaling 75,500. Can it happen in business where your expenses are more than your revenue?
Yes.
Yes.
It happens. If you don't believe me, go look at Tesla's financial reports several years back. That was happening every
You're
year.
in the red.
Wow, yeah. Okay, so it happens, and it doesn't mean necessarily the company, it's not a good thing. You don't want that to go on indefinitely, but by the same token, it doesn't mean that the company isn't going to find its way out of, what they call the red at some point in time. They call it in the red because in the olden days with calculator tapes, negative numbers were in red and positive numbers were in black. So that's why when the company says we're in the black, I don't know if you've ever heard that, but that
Yes.
means that for an old calculator tape, it would print those numbers in black. The red would be the negative numbers. Okay. All right. So they obviously have a loss. Okay. And it can happen. All right. Now, we're looking at that loss, and then they tell us that the retained earnings at January 1st. So this is for what? This is, even though probably a better presentation would have been to tell us that the year end is 12/31/2013 here. Okay. And so at that's for the year. That runs from what, January 1st, 2013 in this example to December 31st, 2013. Okay. And they tell us that at January 1st, the retained earnings was 50,000. And they want to know, after we consider these additional information, what should it be at December 31st, 2013? So how do you figure out retained earnings? How do you figure out retained
So
earnings?
net income minus, retainer
Stop. Stop.
beginning.
Stop. Go ahead. Now go. Go ahead. Go ahead.
Okay.
You're right. Go ahead.
So beginning retained earning was 50,000
Okay,
minus we
stop,
have a
stop,
loss.
Stop. Always set it up. Okay, so beginning balance, you said?
50,000
Good. Let me get rid of that.
minus loss 5,500.
Okay, good. Now we call it an add for net income, but if net income is negative, then you have to subtract it, don't you? And we call it negative net income a loss. Good. Excellent. Okay, go ahead.
And minus distribution
Subtract what?
10,000.
I
Distribution
don't know what
dividend.
distribution is.
Dividend
Dividend, good. Which is a distribution of the earnings, but we don't call it distribution, call it dividend. Okay, good. That dividend was how much?
10,000. 10,000.
10,000, which by the way, would be the world's worst business decision, to sit there and suffer a loss and pay a dividend. If I'm holding the stock of a corporation that pays me a dividend when they've shown a loss, the next act I will do after receiving that dividend is sell that stock, because they obviously don't know what they're doing. Okay, all right. And then the ending, you don't pay a dividend when you have a loss. The ending balance, therefore, would be what? Who was helping?
34,500.
Okay, 34,500. Good. Okay. Excellent. Good work. Okay, now let's see. Before we adjourn, okay, I'm going to go ahead and end class because I think you've got some work to do on your own here. Is there anything in this practice exam, don't point out the ones I crossed out, that you could not have answered by being the master of the year 1, year 2 example? is there anything here that wasn't embodied in that year one, year two example? When I
No.
mean specific amounts and stuff, but just the concepts.
No.
No,
Good. That means that if you can master that thing, if you can do well on that, even though I listed it as the third most important document, because you got to know the other two to be able to do that one. I'm telling you, that is the key. Okay. And the whole notion of rolling the net income into retained earnings, and then how that process then, you know, subtracting the dividend, how that gives you the correct amount for retained earnings at the end of the year. I have CPA students that I still have to remind that too. Okay, remind them of that. I think that is a weak area that isn't pushed on enough in an introductory class. That's why I'm pushing you on that. You've got to understand that process as well. Okay. All right, guys. Any question?
Will you be releasing the other practice midterms so we can practice over the weekend?
Yeah, I will. Yeah, I'll make that commitment to do that. Yes.
Thank you.
Yep. Okay, guys, some of you that weren't ready to rock, you will be receiving an email from me. Okay. All right, guys, I'll see you.
thank you, Professor.
Bye.
Thank you.
Thank you, Professor.
Bye-bye.
Thank you, Professor.
Bye.
Bye,
Thank you.
guys. All right, keep working hard.